Take a look at futures this morning on the final trading week of the year. Right now, we've got futures pointing slightly lower. The S&P 500 nearing the 7,000 level and tracking an eighth straight monthly gain. All three major indices posting double-digit gains for the year, led by AI. Strong economic growth and, of course, 3 consecutive Fed rate cuts. The Nasdaq surging over 22%. The Dow up 15%. The S&P 500 has jumped 18%. Let's bring in Market Rebellion co-founder Pete Najarian. Pete, we want to keep this party going. What is your outlook for next year?
I'm very bullish about next year. When you look across what really has transpired over this past year, yes, we had those huge bumps, some volatility, especially when you go all the way back to April, which we want to kind of forget about that one. But I think that the reality is that when we really look at where the volatility itself has been within the market, you look at the VIX itself, it's well down there. I mean, we're talking about somewhere close to, call it 15 to 16 has been the area where we've seen the most. Now, we've had some spikes, absolutely. We've had some jolts into the market, but I'm looking at this market right now. I see strength, it seems like almost everywhere, because the pieces of the puzzle that are fitting in right now from different parts of the world, I think are making things that much more interesting. And what I mean by that is, for instance, silver's part of this AI play to the upside. And you take a look at what silver has done, even gold, but specifically silver, it's up 155%. So I think that there's still some room to the upside, and that's what the options world, my world, is telling me right now, is that they continue to buy upside calls, and that tells me that somebody out there still thinks there's room to the upside.
Interesting. No, and I know that I've got Lou Bassanese on set with me, and Lou, you also echo this bullish sentiment about 2026. Jump in here.
Yeah, Pete, I'm similar to you. I see all the setup strength across the market, even in areas and sectors that we didn't have it or expect it, like biotech rallying back this year. I'm curious, as you look out at 2026, look back a little bit and say, hey, Google, unexpected trade, worked out really well. Healthcare starting to work. Is there something in the options market right now that you're seeing that suggests we could see a rally in an unexpected sector, maybe in energy, because it's the lowest weighted and undervalued, or something like that?
We haven't really seen, in the options world at least, we haven't seen a whole lot of energy being a part of this whole thing, but certainly technology, to your point. You look at Google, that's one of my very favorites. And by the way, when you look at Micron Technology from just the other day, when we've had earnings have kind of saved the day. When we start to kind of get a little bit weaker, the markets start getting sold off a little bit. Something always seems to be the trigger in the earnings. And when you go across the earnings throughout this year, they've been pretty outstanding. And most recently, how about the savior of Micron just the other day? I mean, that was just about a week and a half ago. That was unbelievable. When you look at the revenue up 57%, the earnings were up. They crushed it on the earnings side. Gross margins were 65%. I mean, we look at some of these numbers and they're just extraordinary. And I'd even say the same thing about Google and what they've been able to do. It's been incredible. And they're starting to make some pretty big moves on this OpenAI with Gemini 3. A lot of support behind that as well, that they might be surpassing. And you look at those numbers that they put up just the other day. It was not that long ago, I should say. The earnings there, the growth is there, absolutely. The cloud growth, even search is still growing at 15%. Revenue was up 16%. These are names that have been around for a long time. This isn't just this AI world. This is more than that. But I'm very impressed with what's been going on, transpiring over the last quarter.
Interesting. Very interesting perspective, especially on that stock from you. Let's look at yields this morning, the 2 and the 10, because the countdown is on. President Trump is closing in on his pick for the next Fed chair. There's an announcement expected as soon as early January. We shall see. But according to reports, the president has narrowed the list to 4. Kevin Hassett, Kevin Warsh, Christopher Waller, and BlackRock executive Rick Rieder. All of these picks are seen as more prone to lower interest rates, to cut rates. Bank of America CEO Brian Moynihan is warning that markets will punish any move that undermines, the Fed's independence, saying that confidence in the central bank is critical for financial stability. So what do you make of those comments from Brian Moynihan about Fed independence, so that markets would not be happy if they perceive the next Fed chair to be someone that would be more amenable to what the administration wants versus what maybe Wall Street wants?
I think even though we're looking at this from the perspective that we are, and we're looking at this as friendships actually with the president, I think that they can separate that out a little bit. And that's where I think this really could go. I don't think we're going to see anything in January happening. I think we do get out to March. Maybe it's another 0.25%. But you know what? The Fed has always told us that they are data driven, right? So if that's really the truth, and I think that it is, but if it's really the truth, we're going to see exactly what happens with some of these potential cuts. Right now, I would say we're in for at least one cut, I think, in the first couple of months of the year. But I don't know that it's something that we're just going to pound and pound and pound against that. So whether it's Hassett or Reeder or whomever, Waller, I think that they understand that. And there's friendships, of course, with the president. But outside of that, these are also businessmen who understand what's going on, and they know when they're going to have to make some of these moves based upon the data, hopefully.
You think we're going to get a cut before April?
I do. I think on the March, I think we're going to see a cut there. I mean, that's the highest potential, at least right now, according to the CME tool. That one seems to be where we're leaning right now is March, the highest possibility of that. And so that's why I'm going along with that. But like we've talked about, it is data driven, supposedly. So if that's the case, we're going to have to wait and see.
Pete Najarian, it's always great to speak with you. Thank you so much for being with us this morning. Happy New Year.